Thank you, Mr. President. It was about 2 weeks ago that I had the opportunity to tour a steel plant in Reading, Pennsylvania. The plant is owned by Carpenter Technology. It's a company that was founded in 1889. It's quite extraordinary, a vast complex in Reading, Pennsylvania. They have 2,000 employees in Berks County, which is where Reading is located. And they have an additional 1,200 or so folks throughout other parts of Pennsylvania. Carpenter Technology is a leading producer and distributor of specialty metals, including what they call soft magnetics. As I understand it, soft magnetics increase the efficiency and the power and the battery life of electric motors. That's one of the main applications of these soft magnetics. It's a feature in steel and other metals that allows the magnetic properties to be turned on and off very rapidly. It's an amazing technology, and it's an absolutely essential component for all kinds of products, including aircrafts, electric cars, even medical devices. It's quite a range of products. And one of the things that I learned, of the many things I learned while I was at Carpenter Technology, was that tax reform is working for Carpenter Technology. While I was there, the CEO announced a $100 million investment right there in Reading, Berks County, Pennsylvania, to upgrade their capabilities and their capacity to produce these soft magnetics. To be more precise, they are buying an entire new hot rolling steel mill in Reading, Pennsylvania. $100 million investment in a new mill that will allow them to expand their output and meet increasing demand for this really fascinating product that they make. One of the things that the leadership of Carpenter Technology made abundantly clear in their press release and in their public statements was that they were able to purchase this mill and make this $100 million investment in their company now because of the tax reform that we passed. Mr. President, this is exactly the type of capital investment we envisioned when we passed the tax reform. It was exactly for this kind of economic activity and expansion that we wanted to lower the cost of deploying this capital and expanding business and generate the economic growth and prosperity that comes with this. And by the way, Carpenter Technology is not an outlier. This kind of investment is consistent with the sentiment that we are seeing all across the country. Just the end of the first quarter, the quarter that just ended, there was a large survey of American chief financial officers, CFOs, across the country. It was carried out by Deloitte LLP, and it was exploring the question of growth expectations for capital expenditure. And the fact is, their conclusion is that these CFOs anticipate greater growth, more hiring. In fact, the sentiment is at a multi-year high. Why is that? Well, here's what Deloitte had to say about it, and I quote, "Clearly, there's a high desire for investment in the U.S., and that is coming from just the structure of tax reform. CFOs are expecting higher domestic wages. Almost 40% are anticipating and planning for higher and front-loaded capital investments, and about a third higher research and development. What they've said is because of tax reform, they're going to take those actions." It's very straightforward, Mr. President. It's very clear. So here we are just 3.5 months since passage, and the tax bill has already and continues to benefit workers and businesses. And boy, these are not the crumbs that some of our friends on the other side of the aisle have tried to suggest that they are. There's over 500 businesses that we know of, businesses that are sufficiently high profile that we've read about and we can track their announcements. These 500 plus businesses employ over 4 million workers. Mr. President, over 4 million workers across America have already received bonuses, wage increases, enhanced benefits, increased contributions to their pension plans. It's already happened and attributable entirely to the tax reform. So the benefits from this tax reform are clearly already flowing to the very workers that we intended to benefit from it. So my friends on the other side have had some struggles in thinking about how they can disparage this. They've come to realize that calling $1,000 bonuses and multi-$1,000 pay raise, calling them crumbs, is probably not such a good idea. So they've kind of shifted the argument to be a class warfare argument, and I hear two varieties of this most frequently. One is this idea that, well, the benefits all flow to the rich. And the second is this idea that, well, these are greedy corporations that get this tax savings, and they just use the money to buy stock back. Let's unpack this a little bit. What about this argument that it all flows to the rich? Well, there's one problem with that argument. That problem is it's not true. It's not true at all, because when we did this tax reform, we did it in a way that makes the tax code more progressive. What does that mean? That means that upper income Americans, the wealthiest Americans, have an increased percentage of the total tax burden. So while everybody gets a savings, in percentage terms, the savings disproportionately goes to middle and low income workers, and disproportionately small amount of the saving goes to upper income workers. So when the dust clears, the net effect is wealthier people are paying a larger percentage of the total tax bill than they paid beforehand. So clearly, the benefits of this tax reform are flowing to everyone, and disproportionately to low and middle income people. And what about this idea that these stock buybacks are such a terrible thing? There have been some stock buybacks. What does that mean? That means companies have taken the additional free cash flow that they have, and they've decided that in some cases they'll take a portion of it and return it to the owners of the company. Well, it just so happens that about 40% of the owners of the public companies in America are the people who have saved in their retirement plans. It's 401k plans, IRA savings accounts, 529 plans, defined benefit pension plans. These are middle-income Americans whose savings are invested in the stocks of companies. So in some cases, yeah, there have been stock buybacks. That means these savers have had cash introduced into their accounts, which then can be deployed by the managers of these accounts into new investments. And that's what happens for anybody who's selling their stock in response to a buyback. They get cash, and what do they do with that cash? They get the chance to then reassess where they invest their money, making new investments, making different investments, reallocating capital, and shifting capital to where there's the greatest demand for it. This is exactly the way a free enterprise system should work. This is exactly the mechanism that allows capital to flow to its highest use and helps to encourage still more economic growth. And better still, Mr. President, this is just the beginning. We're only 3.5 months into this. We haven't yet even begun to reap the benefits as a country, as a society, of this reform tax code. Businesses are already responding to the incentives, and with the lower cost of capital, the lower after-tax cost of capital that we've created, we are seeing that increased investment. And what increased investment means is, first of all, whether it's a tractor or a new factory or a piece of machinery or a steel mill in Reading, Pennsylvania, that investment, it invariably required workers to produce that investment. So there's greater job security and more opportunities for those workers. But then the company that actually deploys that investment, such as Carpenter Technology in the case that I just mentioned, their workers become more productive. Their workers have new tools that allows them to command higher wages and a better standard of living. That's what's happening. And that's going to continue to develop as companies are just now beginning to have the opportunity to deploy that capital only 3.5 months into a new tax regime. So I'm just delighted that every week that goes by, I learn about more Pennsylvania workers, more American workers who are working for businesses that are benefiting, that are enhancing their investments. It's a really good news story. Now, let me shift a little bit to the Cbo report that came out earlier this week. There's a few things worth noting. One that's should be on all of our radar, Mr. President, and that is the fiscal challenge that we face. We have too much debt, and that number is growing too rapidly. This fiscal year, the gross amount of the federal debt is $21 trillion. By the end of this 10-year window that the CBO contemplates, that number goes up to $33 trillion, and that's a huge problem. But I think it's important that we stress where this problem comes from. This, Mr. President, is a spending problem. This is not a revenue problem. You can see this in the CBO numbers. In June of last year, so almost a year ago, CBO projected that over this next the 10-year window that they were considering at the time, we'd have $43 trillion of tax revenues flowing into the federal government with $53 trillion of spending. So a net deficit over that period of $10 trillion. 1 year later, CBO updates its projections, and now it's calling for $44 trillion in revenue over the current 10-year window, so $1 trillion higher in revenue, but $56 trillion in spending, $3 trillion more spending. So we go from a 10-year window that looks like the CBO is projecting a $10 trillion deficit to a $12 trillion deficit. Clearly the deficit is growing, and clearly it is driven by the increase in spending. Look, bottom line, whether you're talking $10 trillion or $12 trillion, this is way too big a deficit. But the tax reform is going to enhance the revenue collected by the federal government by helping us create a larger economy to tax. The spending, that's our fault. That's something we've got to get under control. A couple of other things the CBO observes. I mean, they talk about our tax reform, and they talk about the terrific things. They say right there in the report, and I quote, that the tax reform results in, quote, higher levels of investment, employment, and GDP. That's the CBO. And you can see dramatically different projections of economic growth post-tax reform, according to the CBO, than we had pre-tax reform, according to the CBO. In January of 2017, they projected that this year, the economy would grow 2%. But after the tax reform has passed, they reassess this year, and they take the projection of 2% for this year, and they say, no, now it'll grow 3% based on the tax reform. That's a 50% increase in the growth of our economy. That's huge. Next year, 2019, they were projecting 1.7% growth. Now, post-tax reform, they're estimating 2.9% growth. So 1.2 percentage points, again, almost 50% increase. These are huge increases, and they explain it. They say, and I quote, the largest effects on GDP over the decades stem from the Tax Act, boosting the level of real GDP by an average of 0.7% over the 2018 to 2028 period. So the fact is, this tax bill is already working, Mr. President. It's making the structural changes in the tax code that create a greater incentive for businesses to invest. It's making American companies and American workers more competitive than we've been in a very, very long time. It's going to increase the capital stock, the invested assets in our businesses that allow our workers to become more productive, and it is going to continue to allow those more productive workers to earn higher wages. But let's be honest, no one can prove with certainty what the future holds. So it's worth looking at what is happening in the present. And as a result of our tax reform, what is happening today, what's happening in the present, millions of Americans have been receiving bonuses, millions of Americans have been receiving pay raises, millions of Americans have seen increases in their pension contributions, millions of Americans have seen an increase in the value of their pensions, and millions of Americans, like the workers at Carpenter Technology, have seen greater job security and greater opportunity as their employers are investing in their company, and that is already beneficial for all of us. Thank you, Mr. President. I yield the floor.